People who know what's going on and those who don't want to hear mainstream noise, get ready. What I'm going to say will make you doubt what you think you know about XRP, Ripple, and the whole crypto world. This is not surface level chart talk. This is the kind of framework that shows why the market moves the way it does, who gains when ordinary investors panic, and how liquidity events happen before the news even starts. Because right now, while retail investors flinch at every tiny dip and analysts drown you in trend lines, something else is happening beneath the surface, quietly, methodically, strategically. XRP is getting close to the kind of situation that leads to dramatic price discovery instead of a steady rise. I'm talking about a liquidity-driven move that can reset the entire narrative in a matter of days, sometimes hours. And if you're only reacting to headlines, you're not early, you're exit liquidity. Before we get into it, hit the like button and subscribe. Because missing the timing on a move like this doesn't just cost you gains, it can cost you position, conviction, and the ability to act calmly while everyone else is emotionally trading noise. This is the main point. Markets don't move because of your feelings. Markets move when liquidity shifts. Liquidity moves first. Next are the headlines. XRP is in a unique category because it has had to change under pressure, whether you love it or hate it. And stress makes things work. Now let's talk about what's changing. Right now, the signals we're seeing are louder than what most people recognize because the average trader doesn't track the right things. They look at the price, they watch the timeline, they keep an eye on influencers, but they don't pay attention to the mechanics. And the mechanics are where the truth lives. XRP has been quietly aligning itself with a series of moves that scream one thing. Not just speculation, but getting ready for use on a large scale. That doesn't mean there will definitely be a moon tomorrow. It means the conditions that typically precede large capital flows are forming. And those are the exact conditions that cause events with a lot of volatility. The kind of volatility that makes people sell at the bottom out of fear and then buy at the top out of fear of missing out. And yes, there is a reason why the market seems to be pulled in two different directions all the time, because it is. Retail trades the story, institutions trade the framework. What does that structure look like in real life? Begin with on-chain behavior and activity in the ledger. If you see that the number of transactions per day is slowly going up, that liquidity pools are getting tighter, and that wallet clustering indicates patterns of accumulation that don't match random retail behavior, you should pay attention. Not hype, but positioning the market. This is the part that most folks miss. Accumulation doesn't necessarily appear like a big green candle. It can look like boredom sometimes. Sometimes it looks like suppression. It can look like endless chop that wears people out till they quit. That's how the game works. Get the crowd tired, then relocate the asset. Now, I'm going to say something that will make people angry, and that's okay. The truth doesn't care if it's comfortable. A lot of FUD is not meant to give you information. It's meant to make you feel shaky. At the very point when big players desire the cleanest entries, it makes things unclear. Not every bad headline is false, though. It suggests that negative stories can be used to hide things, especially in assets where it's easy to change people's minds. XRP also has one of the most emotionally sensitive retail bases in crypto. That's not a bad thing to say. It's true. Emotion creates volatility. Volatility opens up new possibilities. Opportunity brings in a lot of money. Now, let's talk about the institutional side, because this is where the conversation changes from crypto to real-world money management. When you hear rumors of banks testing corridors, when you hear chatter about cross-border settlement infrastructure, and when you see Ripple's collaborations growing outside of the loudest Western media cycles, you're witnessing a pattern. Institutions don't say they're testing things out until they've already moved on from the testing stage. They move and check things out silently, and they only talk loudly when the pipes are already in place. So when you hear names like JP Morgan, Citi, Santander, whether it's testing, research, pilots, or corridors, here's what matters. It's not the headline. It's the reward. Institutions don't care about what you believe. They want to minimize costs, speed things up, make settlements more reliable, and reduce friction. So when XRP is seen as a bridge asset story, the relevant issue isn't, is it a perfect system? The most crucial question is if it can accomplish the job better than what is already there. If it can, capital will put it to the test. The market will eventually change the price of the asset based on how useful it is if capital tests it. And this is when the SEC factor turns into gas. This is what most folks get incorrect. They treat regulatory delays like pure bearishness. But delays also make things very unpredictable, which lowers their value. And that's exactly what smart money loves. Uncertainty discounts. If you can save up during times of uncertainty and then the uncertainty goes away, you get the repricing event. That's the whole plan. And if you think institutions wait for everything to be perfectly clear, that's not how markets work. Institutions wait for things to become clear enough. They wait for the risk to be something they can measure, not something they feel. When risk can be measured, positioning is the only thing that can happen. So when you see the SEC story change a lot and there are delays and things aren't clear, know what that means. It makes retail respond. It keeps the story messy. It keeps the market cheap. And that's exactly when long-term positioning gets built. Now let's speak about the setups that make people act violently, the ones that make folks go, what the hell just happened? There are a few classic trigger categories that can overlap and create a chain reaction. First, regulatory inflection. Not always a decisive win, not always a big statement. Sometimes it's just a change in tone, a procedural milestone, or a reliable hint that things are getting better. Second, speeding up partnerships. This isn't about one more deal. It's all about the momentum of network effects, the moment when more than one route, area, or institutional rail starts to connect quicker than the market can price in. Third, a jolt to liquidity. This is the one that breaks the charts. When liquidity is low and demand is high at the wrong time, prices go up quickly since there aren't enough sellers at the moment. That's when gaps start to show up. That's when candles become vertical. That's when shorts become stuck. Fourth, positioning unwind. If too many people are leaning one way, short or underexposed, the market doesn't just drift upward, it breaks. And that snap is what starts the chain of purchases. Forced coverage, forced allocation, and forced I have to buy now behavior. This is why you'll see huge moves that don't make any sense to individuals who simply watch the news. Because the news didn't cause the move. It was the positioning. The news was exactly the match. Now let's talk about one of the greatest problems with the kind of story you find online. People talk in absolutes. XRP to the moon. XRP is dead. This is certain. This can't be done. That's not an analysis. That's branding based on feelings. Understanding probabilities, triggers, and risk is what real analysis is all about. Yes, XRP may move quickly, and yes, it can also stay down longer than people think. That's what makes it such a weapon for institutions and such a trap for impatient retail. So the question isn't, will XRP go up tomorrow? The question is, are you tracking the signals that tell you when a volatility event is forming? Here's what to watch in plain language. Keep an eye on whether on-chain activity is steadily rising, not merely bouncing up and down. Watch whether wallet behavior shows clustering consistent with larger players rather than scattered retail buying. Keep an eye on liquidity depth at big venues. Keep an eye on whether liquidity is getting thinner, even though interest rates are going up. That's a classic pre-breakout condition. Keep an eye on whether collaborations keep growing slowly. Be aware of geography. In payment infrastructure initiatives, Asia and the Middle East can be early movers, and the Western story occasionally catches up later. When you see repeated signals from multiple regions, you're not looking at a rumor. You're seeing an ecology change. And most importantly, watch sentiment. A lot of the time, the stage is set when the crowd is tired, bored, angry, and sure that nothing will ever happen. The market loves to move when no one thinks it will. Now, let's go one level deeper. Price targets and what could happen. Let me tell you this. You get a repricing event when an asset's price drops because of uncertainty, and then uncertainty starts to clear up and infrastructure adoption speeds up. Repricing events don't happen in polite percentages. They move in steps. They leave a space. They go too far. They create euphoric candles that rewrite the narrative in real time. That's why those who wait for confirmation end up buying after the transfer. They think they're being safe, but they're really just late. Confirmation is expensive, but putting yourself in a position too soon without a plan is also risky since it might hurt you emotionally. So what can we do? You need a plan that takes into account levels, time frames, and how to manage risk. If you think a liquidity event is coming, you put yourself in a position to handle volatility. You don't over leverage. You don't put your rent money on the line. You don't put all your money on one candle. You build a position wisely, knowing that the market can stay irrational longer than most individuals can wait. This is the part that no one tells you. The market punishes impatience more than it punishes being wrong. You can be right on direction and still lose money if your timing and risk are reckless. Let's talk about the primary psychological trap that most traders fall into now: headlines that make you feel bad. Every time you see a scary headline, ask yourself, does this fundamentally change the system, or does it just change sentiment? Because feelings change quickly, systems change more slowly. But when systems change, price doesn't move slowly. It moves in a forceful way. If XRP truly is being positioned as part of broader settlement experimentation, even at the pilot level, then the market is pricing a future set of possibilities. Not certainties, but possibilities are what make major changes happen. That's why it's best not to believe everything. The best thing to do is to pay attention to the signs, accept that things are uncertain, and be disciplined in your positioning. Now let's get to the main point. XRP is moving, but not only. It's in the works. The question isn't if volatility is coming, it's whether you'll be emotionally prepared when it hits. Because when this market breaks, it won't be kind about it. It will move first, and then everyone will act like they knew it was going to happen. Retail fear will meet the accuracy of institutions. Shorts will be in a hurry. People who buy late will chase. Influencers will change the course of history. And the mainstream will act like they knew everything all along, even though they didn't. So this is what really helps you. Stop trading on the news. Begin keeping an eye on the weather. Keep an eye on the wallets. Keep an eye on the liquidity. Keep an eye on the network activities. Keep an eye on the regulatory inflection points. Pay attention to the partnerships, especially the ones that aren't loud, and make a strategy that doesn't depend on how you feel on the day of the move. This is a setup for a systemic transformation. Not a promise, not a prophecy, not a dream, a setup. And if you learn how to spot setups, noise won't be able to trick you anymore. So keep on your toes.